Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we continued our module on how to play stock trades with a look at position sizing and how to buy and sell stocks. In today's lesson we're going to continue this discussion with a look at the most basic type of order that traders use to enter and exit the market, a market order. So let's get started.
Today's electronic platforms give traders many options for entering and exiting trades, which include the ability to tie automatic trade parameters to your stock trades so that they will be executed only if certain conditions are met. The most basic order type that a trader can use to enter and exit the market is what is known as a market order. A market order is an order that is sent to be executed at the current market price, regardless of what that price is when your order is executed. The advantage of using a market order is that you are pretty much guaranteed to be filled on your order, regardless of how fast the market is moving. The disadvantage is that you do not know where your order will end up being filled until after you receive confirmation from your broker of the fill price. It is important for traders to understand that just because they click to buy or sell at a certain rate on their platform, this does not mean that they will be executed at that price. The difference between the price a trader clicks to buy or sell a stock and the price that they are filled at on their trade is called slippage. Factors including the volatility or amount of price movement in the market at the time the order is placed, the time of day the trader is trading, and how active the stock is that they have chosen to trade affect the quality of execution that a trader will receive on their orders. In general, the more active the overall market is, and the greater the amount of volume traded in a stock on average, the more liquid a stock is, and the better execution or fill a trader can expect. Now that we understand this, let's log into our thinkorswim demo accounts and place our first stock trade using a market order. If you've not registered for and downloaded a thinkorswim demo account, I encourage you to hit the pause button and click the demo registration link above this video so you can download the platform and follow along as well. Once you have logged into the platform, go to the trade page and type the ticker symbol for Microsoft, MSFT, under where it says symbol, and then press enter. This will populate the trade tab with the quote from Microsoft. For this example, we are going to say that we feel that Microsoft is going to trade higher, so since we would want to buy in this scenario, we're going to click on the ask price. Once you do this, the order entry box will appear at the bottom of the platform, which will automatically be populated with the default parameters for stock trades. Looking across the window from left to right, you can see that the window is set to buy 100 shares of Microsoft stock. If we wanted to change the quantity, you can simply use the up or down arrows on the right-hand side of the quantity column to move in increments of 100, or you can type in the amount that you'd like to trade. For this example, we're going to trade 100 shares. The expiration, strike, and link columns are not relevant for this type of trade, so you can ignore those. Under the order column, it is currently set to execute a limit order, which we're going to learn about in our next lesson. Since we want to send an order to be executed at the best price available in the market, we're going to use the drop-down menu to change that to read Market. Under the Rules column, it should say Day, which means that the order will be executed based on thinkorswim's normal market hours execution rules. Leave this set to Day for now, as we will cover this option in more detail in a later lesson. Once you have all the parameters of the order window how you want them, click on the Confirm and Send button. This will bring up the order confirmation window, where you can check all the details of the trade one more time before sending the order. Once you've confirmed that everything is correct, click the Send button to execute the trade. After doing this, the order will show up in the order book at the bottom of the platform as a working order, and normally in less than a second, the order will show as filled in the order book. You've just executed a buy market order for 100 shares of Microsoft stock on your paper trading account and can now monitor the trade either from the trade page, monitor page of the platform, or account tab. That's our lesson for today. In our next lesson, we will learn to place trades at a specific price instead of the best price in the market. So I hope to see you in that lesson. As always, if there are any questions or comments, please leave them in the comment section below. And good luck with your trading.